Okay, so what I'm going to talk about today is give you a little update of what's going on with farm policy. I don't know a whole lot. I don't think anyone in Congress knows a whole lot right now. I'm going to tell you a little bit about what livestock disaster programs we may eventually have one day again, if we ever get the programs authorized, and also some of the livestock insurance programs. And just as a background for those of you who don't know me, I'm Jody Campiche. I've been at OSU for about 4 years. I work in farm commodity policy mostly, but really anything to do with policy I do. So gotten more into some of the livestock stuff in the last few years because this is really the first farm bill, the 2008 farm bill, where we really had any programs for livestock producers. And again, anything to do with policy, that's generally what I do. Okay, so I know most of you probably know the Farm Bill was extended through September 30th of this year. A lot of the authorizations for many of the USDA programs were included in the Farm Bill. The sequestration, if you've heard about that, back in 2011, we had the Budget Control Act of 2011. With that, since Congress couldn't come up with an agreement to cut $1.5 billion, they said that we were going to go to this automatic sequestration process January 1st. Well, this extension actually moved that back a couple of months to March. So now we're almost to March again, and Congress is scrambling around trying to figure out what they're going to do now after this sequestration. So again, something is supposed to take place in March. Doesn't mean that it will. The farm safety net has been extended, so for all of our crop producers, I know this is mostly a livestock drought meeting, but I want to give you an update of kind of where we are on crops as well. So that's the direct payments, the countercyclical payments. Apparently Eric wants me to talk louder because he's making some funny face back there. Acre payments and marketing loans. Okay, so they should continue. It doesn't mean that they will, but they should continue. I'm going to talk a little bit about what that means in just a second. Now, what is not included in the Farm Bill? Okay, one of the most important things affecting kind of this meeting today and livestock drought is the livestock drought assistance programs that were authorized in the 2008 Farm Bill, but they ended October of 2011. So we haven't had them in place all of 2012 and now into 2013. There's been a couple pushes, a bill introduced in the House last year to just fund those livestock disaster programs, and I'm talking about the livestock forage program, the livestock indemnity program, and then the emergency livestock and honeybee or something like that program. The program that mostly affects Oklahoma and paid out a lot of money in 2011 was the livestock forage program. Now, the House and the Senate, when they came up with this Farm Bill extension, pretty much at the last hour of right before midnight of the last year, they included funding for these mandatory livestock disaster programs. When it went to the Senate actually took out the mandatory funding. They included an authorization of appropriations for these livestock disaster programs. What that means is that now it goes to the Appropriations Committee, and the Appropriations Committee gets to decide if they're going to give funding to these livestock disaster programs. If we had mandatory funding, it would automatically be funded, and we wouldn't have to go then to the Appropriations Committee. There's kind of a long-standing relationship between what happens with the Appropriations Committee and what the Ag Committees actually want, and that's a lot of the times not the same thing. So just because it's going to the Appropriations Committee doesn't mean it will get funded. However, there's a lot of discussion in both the House and Senate about the livestock disaster programs, so I do anticipate that sometime in the relatively near future that they will fund them. Now, what they're saying also is that once they do get funded, they're going to go back and cover 2012 losses, and they would also cover 2013 losses. And again, mostly for the livestock forage program, this will be big for a lot of Oklahoma producers. Now, producers who were in it back whenever it was actually in place, you had to be enrolled in crop insurance or NAP on all crops that you could be enrolled in. What they've said they're going to do with this, though, is if they go back and cover 2012 losses, they're not going to require you to have NAP coverage. Because the program didn't exist then when you had to get NAP coverage, so they can't go back and say, hey, you had to have NAP. There has been some discussion about making you go back and pay the NAP fee. just so that you could have coverage, but again, I think they'll throw that out. I think it'll just be producers will be eligible. If you're a livestock producer and you meet the eligibility requirements, you won't have to have that NAP coverage because again, you've passed the deadline obviously for 2012 and for 2013. Now, the other thing I wanted to point out is if the sequestration actually does take place in the next few weeks, we have no idea what's going to happen with that. The ag committees have really no clue at this point what the cuts are going to be, what it's going to mean for agriculture. So right now it's just kind of everybody's kind of waiting to see what happens. So with the livestock disaster programs, they have no mandatory funding. This is even worse once we go into a sequestration process because those programs that have mandatory funding are at least a little bit more protected. But again, because of all the discussion on how important the livestock disaster programs and the drought across the country, I think that these programs will eventually get funded. I just don't know when. I've been saying this about the Farm Bill though since the end of 2011, and I'm still saying it, and I still don't know that it's going to happen this year. And just real quickly, I wanted to put up what the two main livestock programs are that would affect Oklahoma producers once they do come into place again. We have the Livestock Indemnity Program, and that is paid on farms that have livestock death losses in excess of normal mortality. Now, one thing to point out about this program is that it can be cumulative across the year. So a producer wouldn't have to have like that total death loss at one time period that would exceed the normal mortality rate. If they keep good records and they turn those records in each time they have livestock losses throughout the year, you know, by the end of the year they could actually exceed normal mortality. So what I keep hearing from the FSA offices is that producers need to keep good records. They need to turn in their livestock losses. They need to be able to document that they actually had a livestock loss and not just say that one of their calves went off and died somewhere. They need to be able to document it in order for this to take place. The Livestock Forage Disaster Program, this is the program that paid out a lot of money in 2011. And of course there are eligibility requirements, but it's paid on, it's for grazing losses for covered livestock. And so producers obviously had to have livestock on the land. It doesn't pay any more than the normal carrying capacity. So if a producer is carrying way too many cattle on a specific plot of land, obviously it's not going to pay per head if they're over the normal carrying capacity. So there are a couple rules in there on how this program works, but it's been very beneficial. So once these programs get back into place, I would highly suggest that you encourage any livestock producers to at least go in and apply for this assistance because it's quite likely that they'll probably qualify for it. The other program I wanted to mention, I'm not going to talk a lot about today because it's a pasture hay forage insurance program, and it's based on a rainfall index. I'm not going to talk too much about it today because the deadline to enroll in this program is actually November 15th. So each year for the 2013 crop year, you had to enroll by November 15th of 2012. So it doesn't help us a whole lot right now, but coming November, it's been a useful program. You can insure hay or forage. Obviously, hay is more expensive to insure, but there is a decision tool online. I've got some fact sheets, so once we get closer into November, if anyone's interested in it, you want to learn more about it, I can always come out and talk about it, or I can send you some information. It's been, for the producers that I know that have used it, most have had a pretty good experience with it, especially for forage. It's pretty inexpensive coverage. You choose at least two-month time periods over the course of, say, January through December, where rain is most important to your operation, and you would insure those time periods. And you can only put a certain percentage of your acreage into each of these time periods to insure. And again, we can talk more about this later. I just wanted to kind of throw it up here because, again, right now they can't enroll again until November. But it is a somewhat useful program. They can go online and kind of run some numbers, put their acreage in, and see. It'll actually calculate what the payments and what the premiums would have been from, I think it goes from like 1930 to the previous crop year. So they can look at kind of for their own operation, well, if I would have had it this year, this is what I would have paid, this is what I would have had to pay to get it. and that is through a crop insurance agent where they have to get this insurance. The other program that I wanted to mention is a livestock risk protection program, and it is also purchased through a crop insurance agent. And depending on the area of the state that I'm in, some have heard of it, some haven't. Have most of you heard of this program? Anyone? There's a website, there's more information that I can give you after I get done later if anyone's interested in it. But it's a price protection program, and what kind of happens is you can buy it throughout the year, and there's a website that tracks what the prices are, so producers can kind of look at that frequently throughout the month, throughout the week, whatever, and decide when they want to insure that particular price. I've heard good things about it from crop insurance agents. I haven't really talked to too many producers myself that have it, but it's just another tool that's out there. And again, a lot of people just, I think, don't know about it because if they don't actually have crops or go to a crop insurance agent, then they may not have heard about it. But if any of you want more information about it, talk to me afterwards, and I'll give you some more information about it. Okay, the next thing I wanted to mention is the NAP closing date is March 15th, and that is for grasses for grazing, alfalfa, sorghum forage, some other things, watermelon, squash, in case anyone knows anyone with those. But the deadline for NAP is March 15th, so definitely anyone that wants NAP coverage needs to get in and get that. Same deadline for crop insurance for spring crops is also March 15th. Price discovery is going on right now from February 1st through February 28th for the spring crops. I kind of put the price in parentheses what the projected price right now is. They'll still track the price through the end of February, so that's not final yet. The other thing is deadline for wheat producers who want to put their crops to other uses also is March 15th. The deadline to take cattle off of wheat is March 15th if you plan to insure spring crops, so that's another deadline to think about. One thing I wanted to mention too about NAP is in the past, kind of heard mixed results about NAP. NAP coverage is not all that expensive, but it depends on the size of your operation of whether it makes sense to get NAP coverage. I'm trying to think, it's $250 per crop, or is that what it is now? It was $300.
Per county.
And some cases I hear people say it's just not worth it, that it doesn't pay out enough. The NAP program in general has paid out a tremendous amount in the last year. Like, I think it's probably about 4 or 5 times the amount that NAP normally pays out. So it's actually been a pretty beneficial program last year.
Really close to $5 an acre last time. Yeah.
And in the Farm Bill, in the House version of the Farm Bill, they actually put a proposal in there to increase NAP coverage and offer some buy-up coverage. And we're still kind of doing some research on that to figure out how that's going to affect Oklahoma producers and if that's a good option. But how it works and how they've set it up in their version of the Farm Bill, and obviously we don't have a Farm Bill right now, but what they wrote up is that offer producers the choice to buy up to, I think it was up to about 75% coverage, and so then they would pay a higher than that $250 premium, but it would also offer better coverage. Trying to find more options for livestock producers and to offer better coverage for forage. So again, that's not something that's in the Senate bill, and the House hasn't pushed it too far yet. It's just kind of something they put in there as a placeholder, as something they want to consider, and they're going to look at it more in the next few months. And again, if we ever have a Farm Bill, it might be in there. But the latest I've been hearing on the Farm Bill discussion is that I don't think anything may happen until probably May, where they may start looking at what's going to happen with the Farm Bill. Right now they're going to figure out what's going to happen with the sequestration process. We get into the next few months, I think the Senate's going to throw out a few more things. I'm going to talk about that, about some bills that they're wanting to add that would actually cut some programs and potentially add the livestock disaster programs back. Another thing I wanted to mention is in January, 76 Oklahoma counties were declared natural disasters. So what that means is that farm operators who, of course, meet all of the eligibility criteria are eligible for low interest emergency loans. So that's an option through FSA. Do any of you know of many people that have participated in these types of loans? option for some that are looking for loans to kind of help them get through the drought. And they have up to 8 months from the disaster declaration, which I think was on January 8th. So they have about 8 months to decide if they want to do that. But again, it's one option that's out there. Okay, the next thing I want to talk about briefly, again, this has nothing to do with livestock, but this is the acre DCP sign up for the 2013 crop year. So the 2013 acre DCP program are in place based on the extension that took place. It's going through September 30. Now normally producers generally have an incentive to wait until probably mid-May or so to sign up, because mid-May we have a pretty good idea of what the state wheat yield is going to be. So once we have that, we still have, we don't have all the information to calculate an acre payment, but we have more information. So again, the more information you have, the better you're able to predict a payment in advance. This time, I really don't recommend that. I recommend that everyone sign up for DCP early. So the sign up starts today, February 19th? Yeah, sign up starts today. Everyone should get into DCP early. And then, once May comes around, you can actually get out of DCP and get into acre, if it looks like acre would be a better option. And I put out a newsletter on this a few weeks, I guess about a week ago. And I saw Chairman Frank Lucas was at the Farm Bureau meeting yesterday, and he put out a statement almost very similar to what I just said, that to get in DCP early. Now, the reason I'm saying this is that there are some in Congress, mostly on the Senate side, that would like to pass a farm bill this year and not give producers the 2019 direct payment, because the direct payment doesn't actually go out until October. So even though they've said it's in the extension, you're getting direct payments, there are still some that don't actually want to give out that 2013 direct payment. However, generally with the Congressional Budget Office, they consider the acre and DCP contract to be an obligation that they have to fulfill. So the more producers that are actually enrolled in it early, the less likely it's going to be that they're going to be able to take away direct payments. And it's not that I am for or against direct payments. The main reason that I'm saying this is that FSA and a lot of local lenders actually made quite a few farm loans this year and included that 2013 direct payment. They wouldn't have been able to make the loans without that payment, because it was cash flow that was going to come in October. So it probably wouldn't be so great for a lot of the agricultural industry if they took away the 2013 payment based on these loans that have went out, including it. So the Senate doesn't seem to be too concerned about that, because they've been saying, over the last year we've been telling you that direct payments are going away. And most producers know that. Like, I've been saying that as well. I didn't expect them to get direct payments this year. But it's a little bit different story when you are given them and told that you're going to get them, and your FSA loan is based on you including that 2013 direct payment, and then they take it away and you don't get it in October. And I really didn't think that there would be a chance that this would happen and that they would take it away, but I went to DC a few weeks ago, and the more I keep hearing, the more I see it as a potential possibility that it could happen. So again, the best risk management strategy for producers who are depending on that payment is to get into DCP early, and then the FSA office has confirmed that they can actually get out of DCP and get into acre before the June 3rd acre deadline. So that's all I have on that. Real quickly, I just wanted to kind of put up what the cuts are looking like for the House and the Senate. And again, this was the House and the Senate Farm Bill that came out last year. We're kind of in a whole new ballgame now. We don't really know if these are the cuts that are going to be happening this time around. It could be something completely different, and I'm going to talk a little bit about the latest Senate bill that just came out, which is drastically different than this. But for the most part, the blue, they're both increasing crop insurance, and that's mostly to some new supplemental crop insurance type programs, where producers would have the option to add a crop insurance program on top of their individual crop insurance program. Like, their individual buy-up coverage. They would then have the option to get this supplemental coverage option on top of it. And that's mostly what that's covering. There's one for all commodity producers, and there's one for specifically for cotton producers, which is called stacks. They work about the same. It covers part of the deductible portion of their crop insurance. Both the bills have that. I think it'll be in the next farm bill. The Senate, the little tan color, the Senate wants to cut a lot less to nutrition programs. And you're real familiar with how much of nutrition is in the farm bill? It's 80%. So issues related to what versus the other wants with nutrition causes a big hang-up in passing a farm bill. Most of the House cuts are actually, it seems like a large amount compared to the Senate, $16 billion compared to $4 billion. Most of it's actually more cleanup type things that are going on. In one particular instance, it's making certain participants prove eligibility for SNAP benefits, which should be something that is already in place, but there's just a couple of loopholes in the system that mostly they're trying to fix, and that's where that is. The red, that's probably kind of hard to see, that's commodities. It looks like the House on the right is trying to cut more from commodities. They're really not. It's mostly a timing issue when the payment goes out. They actually say the payment's going to go out, the next year. That can actually further extend out what it looks like they're cutting from the current baseline, even though they're not really cutting anymore. So commodities is about the same in both. Both include pretty significant changes to commodity and crop insurance programs. Direct payments, countercyclical payments, acre, and SURE are all gone. One thing I wanted to mention about SURE, well, I mentioned it here. Right now, they are still taking applications for 2011 SURE payments. So anyone that you think might possibly qualify for a 2011 SURE payment should go to their FSA office and apply. Of course, there are some stipulations with SURE. You had to have had crop insurance, NAP coverage, all that stuff to qualify. But what I found with SURE is it's, when it first came out, I would try to run some numbers for people. They would ask me to look at if I thought SURE was going to hit for their farm or not. It's almost like throwing the dice is kind of what I figured out. It's a very complicated program, how FSA calculates the payments. It got to the point I would have no idea if somebody was going to get a payment. We even had a local economist that looked at it too, worked for OSU. He didn't think he was going to get a payment based on looking at all the numbers, and he ended up getting a pretty large payment after all. So again, I just recommend to anyone just going into the FSA office and filling out the forms just to figure out, you might qualify even though you think that you didn't. Now, what this chart shows is just the main differences between the House and Senate bill. The red, which you probably can't hardly see, but it's just these two right here. The Senate is offering the choice between a farm level protection or a county level protection program. And it's very similar to acre. Again, acre is based on a state trigger. So we're moving from a state trigger to either a county or a farm trigger. I don't think we'll have the farm trigger. I think it'll be a county level trigger for the acre program. This is assuming we have any programs left in the farm bill. The House bill is also giving the option of a price protection program, which is similar to the counter-cyclical payment program in the previous farm bill. And those are the two main differences between those two. Now, what I kind of see happening is that, again, I think this is going to happen, but it really depends on what happens with this whole sequestration process. I think commodity producers are going to have the option to choose between a revenue protection program that's similar to acre, but it's paid on a county level instead of a state level, so it's a little more close to the actual farm and what happens on the actual farm. And then they would also choose between that and the price protection program, which is similar to the counter-cyclical payment program. And then they would have the option to add supplemental insurance coverage. So there's going to be more decisions this time. Producers are going to have to learn a little bit more than they had to last time, because for the last farm bill, a lot of people stayed in the direct and counter-cyclical payment program that they already were familiar with and didn't get into the acre program. So this time around, there's not going to be an old program for them to just stay in. They're going to have to choose something new. The other thing I wanted to point out is that with these new crop insurance programs, the supplemental crop insurance, those programs are subsidized by the government. SCO would be subsidized at 70%, so a producer would pay 30% of the premium. Stacks is subsidized at 80%, so producers pay 20% of the premium. Producers may actually decide to change their coverage level on their individual buyout policy. Most producers have somewhere between 65 to 75% coverage in Oklahoma. They may actually want to lower that and take out more stacks or SCO because it's subsidized at a higher amount. Again, it's going to be some interesting questions, especially right now, because most crop insurance agents, I would say the majority of them have no idea how either of these new programs work yet. Most of them don't know too much about it because it's just a lot of the details about them haven't been released yet. Another key change is the change in programs tied to base acres to programs tied to planted acres. Now, in Oklahoma, we actually have a lot more base acreage than planted acres. So producers are used to receiving payments on a lot more acres than they're going to be receiving payments on in the next farm bill, assuming they get payments in the next farm bill. But most of the new programs are all tied to planted acres. Okay, the last thing I just wanted to kind of mention is the latest development and what's going on right now is that the Senate is actually pushing forward a $110 billion budget package. And it's actually, the main thing that is in this bill, is this probably line right here, is what they said is that they want to cut $27.5 billion from farm programs. Pretty much all of that spending is going to come from the direct payment program. And so what it says in the news release is that the Senate wants to eliminate direct payments and give some of that money to livestock disaster programs, which is not entirely true, and I want to explain how that works. Okay, so they're cutting money from direct payments. Right now, under this bill, 2013 direct payments are okay, they're safe, because the Congressional Budget Office says that we have a contractual obligation to pay 2013 direct payments, so you can't cut those. So they're talking about 2014 out to 2022. This is the baseline money. Once we have a farm bill, we have money for the first 4 years of the farm bill, and then they set money aside for basically the next 7, 8 years baseline. So when they say they're cutting direct payments, well, it doesn't seem like that big of a deal because everyone keeps saying, and we've been saying for the last 2 years, direct payments are going to be gone. We're not including them in the next farm bill. Neither the House or the Senate is including them in the next farm bill. So why do we care that the Senate says they're cutting direct payments? Because we already know that they're going to do that. So it sounds good because they're saying, hey, we're going to cut direct payments and now we're going to give you money for livestock disaster programs. What it really means, though, is that money that they're cutting from the direct payment program would have been the money that would be used for the new programs to replace ACRE and to replace the direct payment program. Does that make sense? So what the House is planning to do is use that baseline funding for direct payments and instead use it for the new commodity programs. And if we cut all this money right now from the direct payment baseline, there's no money left in the Title I commodity programs. So producers who are depending on getting payments for Title I commodities are going to have to deal with later on, Congress is going to have to go back and they're going to have to try to take money from other titles in the Farm Bill to put money back into that program. What the House wants to do is actually do a fair cut from all the programs, including nutrition, conservation, rural development, and not take it all one swipe from direct payments. So again, this is kind of the latest thing that's coming out. Lucas doesn't think it'll happen because along with this, they're actually including a bunch of tax hikes as well, and Republicans aren't wanting that right now. So I don't think it'll go through, but again, it's kind of the latest thing. It's the Senate's push to avoid the sequestration. It's just to take all this money out of direct payments and not touch any of the other farm programs. And I don't know what will happen, but I think we'll be finding out pretty soon what's going to happen, because supposedly the sequestration is going to take place March 1st, which is pretty soon. Anyone have any questions? Again, I wish I could give you more information on the livestock disaster programs, but we're just kind of a wait and see of what happens when they get funded again.
So Jody, on the forage insurance program, I know you said you didn't want to talk a lot about that, but I think you told me earlier that it was about 50%, what do you call it, funded by the government. The premium was wasn't it about 50%?
Yeah, now you think about what it was. It was right, I think it was right under 50%.
Just a little under 50%. So I mean, that's why it's been one reason why it's been such a good deal for people who have bought it in the last few years. But the other thing is how the baseline or benchmark where they determine loss of production, is that based on a 20-year average, or how do they come up with that?
It's a county average, and I don't remember if it's based on 20 years or 10 years.
Well,
it pretty much just says it's a county, but you can go in and change what you want to insure. Like, you can increase that coverage level, you can decrease it depending on what you think your actual production is compared to the county.
I guess my thinking is that if we are moving from a period of 30 years of higher than average rainfall and higher than average forage production, and that thing's based on a long-term average, people need to be taking advantage of it right now. Because
how many years is that based on? I couldn't remember.
Well, it goes back to 1930, but the actual average for the county, I can't remember what.
I looked at that. I thought it was like 5 years or something like that. But there was a rolling average.
Yeah, I can't remember. I
and
think
so
it might be
you're
5
right.
years.
If you're gonna get payoffs, they'll be now, where if the drought continues, like we're all afraid is going to happen. Another 3-4 years, there's no payments because that rolling average will be, So if you're going to get payments for that forage based on that rainfall index, that's what's going to happen.
Is the sequestering deal, is it going to guarantee that this administration is finally going to have to pass a farm bill, which they haven't done since they got in?
No.
They don't have
we're still on 2008, aren't we?
But legally, they were required to pass a budget 4 years ago, I was saying. The law doesn't apply to them, right?
Yeah, that's what I thought.
No, I mean, like I said, I keep hearing that nothing's going to be done. They're not even going to look at it until maybe May. Sequestration is supposed to take place this next month. But on another note, with the pasture forage insurance, every time I go, I talk about it because a lot of people don't know about it. And I did several meetings in November before the deadline trying to get people to look into it. And several people seemed really interested, but of course then they didn't go sign up for it. And the deadline passed. And sign-ups once a year, so again, we can't do anything until November. There's another program out there that if some crop insurance do sell, it's total weather insurance. I don't know how many of you've heard of it, but it's sold by the Climate Corporation. It was called something else when it first came out. It pays also on rainfall indexes and soil moisture. I think it has that in there too. That's another option for producers, but again, it's through a crop insurance agent. And it's new in Oklahoma, and I haven't seen that many people who've actually taken it out.